Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 18th of December 2020. Alright everyone, let's get into the news from the last 24 hours. So it has been a very big last 24 hours, that's for sure. I feel like I say that every day within Ethereum, but I woke up this morning and I was like, wow, okay, a lot of things happened while I was sleeping. So we'll get into that in a sec. I just wanted to quickly mention that Gitcoin grants matching round 8 has now ended. According to Gitcoin, it was a record-breaking round, which is really cool to see. So if you did donate to the Daily Gwei and actually to ETHUB as well, I just wanted to extend a big thank you for your donations. It really helps to support me and support all the work that I'm doing and support all the work that Eric and I are doing at ETHUB as well. So just a big thank you there. And also a thank you to you if you donated to other projects too, right? It's always good to give back, especially during these matching rounds where your donations are, of course, matched quadratically, so you can have a bigger impact when donating money. So yeah, kudos to everyone for that. There was a tweet put out yesterday by Gitcoin about how much has been donated. I think that it became a lot more. So this was the day before it ended, basically. So basically, they were able to raise 413,000. Well, not raise, but like $413,000 was donated from 24,842 contributions, or 4,844 unique contributors. Almost 5,000 contributors. So 5,000 like really active Ethereum community members have donated here, which is really, really, really cool. And there was 289,000 in carts, a day before it ended. I'm curious to see basically what it ended on, which would be really cool. And you can see here the top grants that raised the most, they got the most matching on the technology side. It was things like DApp node, ETH2 kind of things. I think there's DApp node, 3 ETH2 related things, and Open Ethereum, which is ETH1 related. And then on the community side of things, I think we had the communities down here. We had Coin Center, obviously like a big entrant this round. Bankless, ETH Planet, DApp Chaser, and DeFi Dad there. And then I think this one was like the infrastructure section where we had like APY Vision, Maskbook, Rotkey, Snapshot, and Keep Alive. So congrats to all those teams for raising a bunch of money there. It's really, really cool. It's Bankless here has 586 unique contributors. That's pretty crazy, right? I think that's probably the most unique contributors out of any grant that I've seen for a while actually. So that's pretty cool there. So congrats to those guys. But yeah, so I guess we can move on to the next thing. Finally, to this. So this was the biggest news, even though there was lots of big news. This was the biggest news from the last 24 hours. Compound announcing that they're spinning up their own blockchain. Now, I wrote a pretty lengthy piece in the Daily Gwei about this with a bunch of my thoughts and explaining exactly what this is. So if you want to check that out, I'll link it in the show notes. It's basically in the Daily Gwei newsletter. But I mean, to say I'm like positive on this is not right. I'm more negative on this. I don't think this is going to be anything good. I don't think it's a good idea. I think it's a pretty poor strategic decision on Compound's part. I don't see the point in it for a multitude of reasons, really. I feel like it's going to fragment, liquidity, fragment network effects, fragment the utility of Compound, for little gain, I believe. I just don't think that the gain outweighs the negatives that come with this. And it's unfortunate because Compound is one of my favorite teams within the Ethereum space. They've done a lot of work for Ethereum. They've pioneered a lot of different things. I mean, I think they were the first money market protocol on Ethereum. So to see them kind of, I guess, I wouldn't say like they stabbed Ethereum in the back or anything, but they're kind of like migrating away from Ethereum, right? Yes, they'll still have bridges back to Ethereum and all that sort of stuff, and apparently the chain will actually be governed by the comp governors on Ethereum still. So there's still like that interoperability there, but at the same time, it kind of feels like they came to Ethereum, they did what they needed to do to grow their platform, and they're basically saying, thanks for all the fish, we're going to go to our own chain now. which I didn't like. And I also just don't think it makes sense from a technology point of view for the reasons I outlined just then. And you can go into go read the newsletter for a longer breakdown there. One thing I will say though is that the general sentiment around this is pretty negative. Like usually if I think something's like a bad idea, I can find at least a group of people that think it's a good idea, right? And I can debate them. We can have like a healthy debate about it. But literally everyone that I spoke to about this today, literally everyone, like not one person was able to give me the bull case for this. They were basically in total agreement with what I was saying and how I felt about it, and they had their own views on it too about how they didn't think it was good. And you can always tell what a company or like an individual thinks is going to be an unpopular opinion by this little feature on Twitter. So on Twitter, you can actually limit who can reply to your tweets. So what they did on this announcement tweet is that they limited the replies to only people that Compound Finance follows or mentioned. So they didn't mention anyone, so only the kind of accounts that Compound Labs follows, and it's only 49 people. So basically, they knew this was going to be a controversial kind of announcement. They knew they were going to get a lot of flack for it, so instead of taking it, they figured that they would just disable replies. And I feel like this is like a Streisand effect, because disabling replies doesn't stop people from talking about it. You can see here, there's 115 quote tweets here, right? If I go into them, I'm guaranteeing you that like there are a lot of people here talking about the compound chain itself and talking about. I mean, some people are bullish on it here, right? Good news. I'm inspired, but then Danger goes on to say, wondering why they are reinventing the wheel here. I guess there's positions on both sides. I mean, the people I've spoken to are more, I guess, like in the weeds of Ethereum. Maybe you could consider them Ethereum maximalists, right? And this goes against that kind of like Ethereum narrative. But I do think it's kind of like torn the community here. But yeah, there's a bunch of people here that are excited for it. I hadn't actually looked at this yet. It's interesting to see that that there are people who are excited about this, which is cool. And I mean, Samyak's part of the Instadap team, so he's not just like some anonymous Twitter account. He's a respected developer within the community. I guess there's other people here like Tom Howard who says why not make their own chain. He's a bit sarcastic there, so I guess he doesn't really think that it's a good idea. I mean. Yeah, there's other comments here. Like, there's plenty of comments. Like, you can go through them yourself. I'm not going to go through all 115 of them. But I guess, like, then I'll pop up there. I guess, like, but what would have happened, I think, would be, when you do this, you kind of fragment the conversation, right? So if you let people reply to it, you basically let them, hash it out in the replies. It's all collected in one place. But when you do this, it fragments it, and then the kind of conversation gets split up here. So, I'm actually just curious to keep scrolling through here and kind of see, the different opinions here. See, hey, Ethereum, stop using Compound, right? There's, didn't Aragon try this already? And then they deleted their efforts. This is actually a good point. I hadn't thought of that. Aragon did actually try this. They said that we're going to migrate to a new chain. They tried it. And then they're like, okay, we're going to go back to Ethereum because that didn't work out. So we already have proof that wouldn't work out, and I'm thinking, will Compound get kind of like usurped now? Will they lose their network effects? Will they basically get forked? Right? You can imagine someone saying, okay, we're Compound Classic, we're staying on Ethereum, use us instead of this Compound because they left or whatever. Who knows, right? There's a lot that can happen here. Because you're not just dealing with technology here, you're dealing with people, right? You're dealing with a very feverish community who, don't like to see this happen. I mean, I'll freely admit that, I have a bias towards Ethereum, right? Obviously, right? And that I want to see things stay on Ethereum. So that informs my kind of views as well. But I also just think in general, like app chains don't make much sense. It just fragments everything, and you lose all the network effects that Ethereum has managed to gain over the years by moving away from Ethereum. And I think that's the reason why one of the reasons why Aragon came back to Ethereum and things like that. So, there are high fees on Ethereum, and that's commonly something that's cited by teams moving off of Ethereum, saying, the high fees are killing us, we have to move, whatever. But there are solutions being built on Ethereum to alleviate that, right? I feel like sometimes I feel like what happens is that instead of fixing what we already have, like people, teams or different kind of like teams, different builders just decide, okay, let's pack it up and move to a kind of like a new city without even trying, or a new chain without even trying, right, to fix it. I'd probably be more understanding if what ended up happening was we tried to fix Ethereum and we couldn't, right? For one reason or another, we couldn't fix it. We couldn't fix scaling. We couldn't solve it. The protocol ossified or whatever, and it was just a disaster. But that hasn't happened. So why kind of leave, right? Why I don't know. I feel like it's like leaving the party just when it's kind of getting started. So yeah, controversial move from Compound here. Something that I think we're going to have to see play out, because I think Compound is obviously much bigger than what Aragon was. So looking at Aragon as an example of what failed probably isn't mapping one-to-one to this. But at the same time, I am weary about if Compound's going to actually see much traction with this. And I actually do think there's a high fork chance, fork risk here now, where someone's going to fork Compound and call it Compound Classic or something to capitalize on this kind of drama. So yeah, curious to see how this plays out. I know there's a lot of thoughts there. You can read more of my thoughts in the newsletter, of course. But I've been stirring on this literally all day. I've been trying to make sense of it because I really wanted to give this a chance, but I just can't. I don't get it. Maybe I will in time. Maybe I'll change my opinion in time. But for now, I'm just kind of bearish on the idea in general. All right, another kind of controversial announcement was Tornado Cash announcing that they're launching a token called Torn, which I think is a bit of a funny name for a token because every time I see these four letters together, I think of Tron. So yeah, it's a bit weird. But for those who don't know, Tornado Cash is basically a privacy kind of protocol or a mixer protocol on Ethereum where you can send ETH or tokens in and mix it, and then you can spit it out and basically have like a clean address with ETH. This has been a popular tool that's been part, I guess, of like the hackers kind of toolkit. People who are hacking DeFi protocols, they always go through Tornado Cash, things like that. It's also been popular for people who want to preserve their privacy. I know a lot of ETH2 validators actually went through Tornado Cash to wash their addresses in order to start like brand new on ETH2, which is really cool. So yeah, they've kind of launched this token, and I don't think they've really thought it through too much. They say it's going to be a governance token for Tornado Cash, but like then they go on to say like this Torn is not a fundraising device or investment opportunity and whatever, which is standard like kind of legal speak. But it's kind of funny though, because like governance tokens in my eyes, like if you launch something as purely a governance token, you're launching it to not make money, but to like, I guess like cash out on your idea, because Tornado Cash is great, right? It's getting a lot of use, but it's extremely hard to monetize open source. So the way you do it on Ethereum is you issue a token, but what ends up happening is a lot of tokens get issued that don't make much sense because they're just pure governance tokens. Yes, you can vote in like fees later and things like that, and fee capture and value accrual mechanisms, but for Tornado Cash, they don't have any of that yet, and I don't see how they would in the future, because I guess it can work if they get like, because it's dependent on liquidity. If there's enough liquidity within the system, they can justify charging fees and they can protect against fork risk. But at the same time, if it's just fee accrual, then I don't see how this token can be, worth a lot going forward, because I don't see a tool like this being used, enough to justify like a really high valuation for the token just based on fee accrual, right? And governance, it's kind of like diminishing returns at this point. The more governance tokens out there, the less the whole are worth, basically. So yeah, I don't know if this has been thought through too much. Maybe it has. Maybe I'm being a bit harsh here, but yeah. I think the most interesting part of the token though is that it's going to actually help bootstrap the protocol, because what they're going to be doing is they're going to be kind of doing a liquidity mining program, which they call anonymity mining, which basically is going to increase the liquidity within the Tornado Cash system. So for those of you who don't know how this works, the more liquidity in the system, which is called the anonymity set, the better it is, because the more kind of like ETH and tokens can run through and get kind of like washed through and mixed through. So by doing this liquidity mining program, their hope obviously is to get all that liquidity in, and be able to kind of like increase that set of kind of ETH in there so people can mix more. And they also say that they're going to be building an AMM on Tornado Cash here, which is interesting. And they're saying that, you know, it's a complex system, but it ensures that user privacy is always protected in the process of claiming, you know, their torn tokens as well. So yeah, there's a bunch to unpack here. I'm not going to read it all. You can go check it out in the show notes. It's a pretty long read here. And, you know, it might seem funny that I'm saying that it's not like totally thought out because, and even though there's like a long blog post here talking about it, but the reason why I say it's not totally thought out is because I just don't think it needs a token, really. I mean, the anonymity set was growing regardless of a token. And, you know, a token will make it happen faster because of liquidity mining, all this kind of stuff. But I don't think it's going to, you know, I don't know. I mean, I'm not going to, like, claim that it's not going to be worth anything or whatever. But at the same time, I don't see the fundamental value in it. Like, if it's just governance, I mean, yeah, I don't really see it that. But maybe I'll be convinced here. I know, like, I just kind of ripped Compound, you know, I ripped into Compound for their announcement, and now I'm doing the same to Tornado Cash. But I don't know. I just kind of felt that these things were kind of out of left field. And I mean, I don't really think anyone expected Tornado Cash to do a token, right? No one really expected Compound to do their own chain. So that's why I'm kind of feeling like this. Maybe I need to digest this more. But at the same time, yeah, I do believe that people should be rewarded for their work. And, you know, make money from their work, and it's hard in open source to do so. You have to rely on grants and, like, you know, funding from you know, companies and projects that do somehow make money, which is not great, right? But at the same time, this is, I guess, like, you know, issuing a token just for the sake of it sort of thing, which, yeah, I just wish it was better thought out, and the token actually had like a purpose other than governance at the start. But I guess for regulatory reasons especially, saying it's just the governance token is what you do these days, right? So we've seen a lot of that, but, you know, I'm curious to see where they go with this and how it evolves. I'm sure they've got plans. Like, the team's great. I'm sure they've got a lot of plans to kind of make this better than just a governance token. But for now, that's what it is, basically. All right, so I spoke about this regulatory news in the last few episodes, and the block got a scoop today on what it might actually be. So this was the regulatory news about the kind of like self-hosted wallets in the US, and people saying, you know, the US is going to ban self-hosted wallets, blah, blah, blah. They're going to do this, that, and the other, which I don't think is true, and I explained that on the previous episodes. But basically, what this post from the block says is that what's actually going to happen, or what they've learned, right? This isn't official information, but it's what they've learned, is that exchanges are going to have to file a currency transaction report if a client conducts a cryptocurrency transaction to or from a self-hosted wallet that involves their exchange and above an as yet unknown threshold. So, for example, if you send in $10,000 in a single day, the regulations will want the exchanges to report this and file it as a report. I mean, this is like a nothing burger. Like, what? I don't get, like, why this is, like, even bearish, or why this is even a big deal. Exchanges already have access to all of this information. Exchanges have records of all of this information. Yes, they're not directly reporting it to these agencies, but the thing is, these agencies and these law enforcement bodies can access this information at any time that they want. They will get a warrant to do so. They will be able to get this information. So, especially if it's over like $10,000, because that's what they've done in the traditional system. So I don't see this as being anything like special. Obviously people were kind of saying, oh, they're going to ban self-hosted wallets, and I don't think they're going to do that. Like, that's just insane. But at the same time, I don't think this is a big deal either, right? I just think it's just like tightening of regulations, making the exchanges have to report this now instead of the law enforcement going to them. But, you know, if they wanted to, they could have gotten access to this data anyway. So not a big deal here. But again, this isn't official. We'll have to wait for the official kind of comment, which is apparently supposed to come out as early as today, so Friday. But, you know, maybe we don't see it till next week or something. I don't know. It's just like all up in the air, and people kind of like, we're like, oh, we're gonna dump because of this, and then we've actually gone up right in price and everything like that. So who knows? we always kind of have this kind of looming over crypto. It's like, oh, is this government going to ban it, or is this government going to ban it? Like the China bans crypto meme is a thing for a reason. I just think it's more nuanced than that. There's not going to be outright bans, at least in the US, right, and in other kind of Western democracies, because it just doesn't make any sense. There's a lot of different players involved. I just think there's going to be tightening of regulations around things, and that's basically it. Basically. All right, on to the next thing. So the Graph launched their network today. So for those of you who don't know, the Graph is basically an indexing protocol for querying blockchain data on Ethereum and other kind of networks. So for an example, when you go to a DeFi website and it shows all your pretty APYs and kind of like position information on like Aave or Compound, for example, and things like that, that's the Graph powering that. So they actually power most of DeFi. They are one of the most used things that you've probably not heard of before because they're back-end infrastructure. So they launched their network today, which came with a native token called GRT. And that token is currently trading at a $2 billion fully diluted market cap. So it went crazy. And I mean, I knew it would, considering how used this protocol is and the fact that the token is going to be kind of more than a governance token. It's going to actually be used to secure the network. It's going to be used to pay fees and things like that. So, and their token model in my eyes is actually very well thought out, and the network model is very well thought out. So yeah, congratulations to the Graph on launching this. They had a huge launch. I mean, they had Coinbase listing them on day one. They had Binance listing them day one. All these sorts of things happening. Which, I mean, I expected because I'm pretty sure Coinbase invested in the Graph. I'd have to double check that, but they usually list things day one when they've invested in it through Coinbase Ventures. So wasn't surprised to see that, but yeah, congrats to the Graph there. If you want to learn more about the Graph, you can go check out their kind of website here, thegraph.com. They're actually a really interesting protocol, and I love their design as well. The design of like their front ends and things like that. It's really cool to kind of browse through. But yeah, congrats again to the team on that one. Speaking of Coinbase, they also put out a big announcement today. What did I tell you? There's a lot of announcements to go through. Basically, they have submitted their draft registration with the Securities and Exchange Commission, aka they've submitted the forms to do an IPO or a public offering to issue Coinbase stock. Everyone kind of knew this was coming. It was rumored to be coming, at around this time. It kind of makes sense. The markets are heating up again. What better time than to IPO than right now, right? You don't want to IPO in a bear market when everyone's kind of bearish on crypto. You want to do it in the heart of a bull market. So this will be going live soon. I'm not exactly sure when it's going live. Maybe they say it in the post here. But basically, I think, yeah, once they've submitted this and then the SEC completes their review process, and, subject to market and other conditions, they'll kind of launch this. So obviously it's not going to go live until next year, but this is going to be one of the biggest IPOs of 2021, I think. There is a tweet thread from Myra here that basically says that Messari values Coinbase at $28 billion from right from the onset, due to the fact that they're doing $1 billion in daily volume. They're growing. They're like the kind of front door into crypto for the US and things like that. So that's a pretty fair valuation, I think. That's less than Ethereum still. So there's this thesis about should Coinbase be worth more than some of the networks it supports. I don't think that maps 1-to-1. I never really kind of understood that thesis, but yeah. I mean, I expect this to happen, and we've seen a lot of IPOs go live recently that have kind of opened at a much higher price than people thought they would. So maybe Coinbase will do the same thing, especially if crypto continues in this bull market, right? The investors are going to be like, oh, I need a piece of Coinbase. And people were speculating, what will this do to the price of like Uni for Uniswap, right? Because people like to compare Uniswap to Coinbase. So will Uni kind of match Coinbase's valuation, things like that? I don't think that's going to happen. But curious to see if Uni actually moves when Coinbase is kind of when Coinbase does IPO and they have a price for their stock or for their share. So yeah, I guess congrats to Coinbase for filing this, and we'll kind of like see what happens next year on all of this. All right, everyone, that's it for today. Thank you again for tuning in. If you haven't subscribed to the YouTube channel yet, be sure to do so. Give the video a thumbs up, subscribe to the daily newsletter, join the Discord, and I will catch you all next week. Have a great weekend, everyone.